So Deanna, if I don't itemize my taxes, how can I deduct a charitable contribution?
Well, that's a good question. And the world of taxes is ever changing. So as soon as we get used to one way of doing it, of course, they're going to go change it on us and confuse us even more. As of now, each year when you file your tax return, you have two ways of getting those deductions. One is the standard deduction that they set forth for you, or two, you can itemize each of your individual deductions that would qualify. So for instance, if you had mortgage interest and your charitable contributions and maybe your business expenses all total more than the standard deduction that they give you, then you would choose to itemize. One of the changes to the tax law recently was an increase in the standard deduction that they're allowing. So for this year, married filing jointly or had increased this year from $12,700 that you could automatically deduct if you were married, has now increased to $24,800. So you can see how it may be harder to get to itemizing those deductions. Many people are going with the standard deduction, but when they do this, then it means that they don't get to deduct their charitable contributions. So there is, however, a loophole that you can have your cake and eat it too. So you can, if you were currently at the age where you're taking a required minimum distribution, so you are in the RMD phase of taking your IRA distributions out. If you pay that distribution directly to the charity, so it doesn't come to you, it goes directly to the charity, then you can still deduct it and have the standard deduction, because it just makes it look like the income never came to you. Now each situation is very different, and you'd have to go in and really analyze this, but that is one way to have both.
I love loopholes.
Yes.
So thank you for that. That is really good to know.
Oh, absolutely.
Thank you.